NVIDIA was down 35 cents when Lilly reported. Immediately, stock went up $1 and then went up $2. Now it's coming back because, NVIDIA is the most hated stock on earth right now, including by Jonathan Cantor. What are they looking into?
Are we in a, I said this earlier as one of the reasons for the turnaround yesterday. Are we in a holding pattern, Jim, until we hear from NVIDIA, which is, by the way, still a few weeks away in terms of its earnings?
Yeah, we are. Because the question is Blackwell really late? Can they make it up with the H100, H200?
NVIDIA is gearing up to release its Q2 fiscal 2025 earnings on August 28th, amidst a backdrop of significant stock pressure. The stock has corrected nearly 26% from its 52-week high due to macroeconomic uncertainty, a broader tech sell-off, and valuation concerns. Additionally, potential delays in the launch of NVIDIA's next-generation Blackwell platform due to design issues have compounded these challenges. Despite this, NVIDIA's strong AI-led demand, particularly in its data center segment, is expected to drive substantial revenue growth. In Q1 fiscal 2025, NVIDIA's data center revenue soared by 427% year over year, and Q2 projections estimate a total revenue of $28 billion, a 107% increase from the previous year. Let's delve into whether NVIDIA stock is a buy ahead of its Q2 earnings report. Despite beating estimates in the last 4 quarters, there are concerns that high expectations and nervousness about AI spending could impact the stock's performance. The company's consistent performance and market-leading innovations have led to elevated expectations, but this also sets a high bar that may be challenging to meet. Stock performance and AI excitement. NVIDIA shares have surged 126% year-to-date, driven by excitement around AI. This excitement has led to higher valuations and fears of a potential AI bubble. The demand for NVIDIA's GPUs, crucial for advanced generative AI applications, is anticipated to continue driving revenue growth, with significant contributions from consumer internet companies and enterprises. Despite the strong performance, NVIDIA stock might decline post-earnings if it misses estimates or if the market remains cautious about the sustainability of AI spending.
The Blackwell event.
Right, because again, if the company tells me that, look, nothing's really changed since August, you could say that they made, and since July, from July to August, you could say that their statement was amorphous, or you could say, well, you know what they're trying to say during quiet period, we're fine. It's during what a great time to hit a company over the weekend in a really bad market when they're in quiet and they can't defend themselves, when they're a pitiful, helpless giant. So I sit here and I say, you know what? If I want to react to the story in the information, I should just do another job. I should just become a full-time watcher of Peacock. I don't know. Like, you want to have some prudence.
All fair.
Some thought.
All fair.
There should be more thought involved. If you just want to join how about the great Russell trade? How's that working now? It turns out that you couldn't get out. It was a Roach Motel trade because the buy-in was all with the futures and they wouldn't stop you out on the go out. That's what I'm told.
The options market predicts NVIDIA's stock could rise or fall by up to 11% following the earnings report, reflecting high expected volatility. NVIDIA has consistently beaten Wall Street's revenue and earnings forecasts, but margins have been decreasing, raising concerns that NVIDIA might miss expectations this quarter. The company's CFO plans to share ROI metrics to address investor concerns about AI spending sustainability. Analysts from Goldman Sachs remain confident in NVIDIA's leadership and ability to sustain the AI spending cycle. Long-term outlook and analyst confidence. NVIDIA's dominance in GPUs and AI chips, coupled with its CUDA platform, positions it well for long-term growth. Analysts expect NVIDIA to grow its adjusted EPS by 51% annually through fiscal 2026, making its current valuation relatively reasonable compared to other AI companies. Investors focused on long-term gains might consider buying NVIDIA, especially if the stock dips post-earnings. Despite potential short-term volatility, the majority of analysts recommend a strong buy for NVDA shares, underscoring confidence in the company's continued growth and financial stability. AI dominance and technological leadership. NVIDIA has transformed from a gaming specialist to a dominant force in the AI industry, controlling 70 to 95% of the market for AI chips used in training and inferencing large language models. NVIDIA's data center business, essential for AI infrastructure, grew 427% year over year in Q1 of fiscal 2025, driven by high demand for its next-generation H200 and Blackwell architecture chips. NVIDIA's technological innovation, exemplified by the new Blackwell GPU architecture, maintains its market edge, offering significant improvements in AI training and inference capabilities. NVIDIA supports its hardware with a robust software stack and partnerships with cloud service providers, making it difficult for customers to switch to competitors. The company aims to capture more of the global AI infrastructure market by offering a full-stack AI platform, including GPUs, CPUs, networking solutions, software, and servers. Additionally, NVIDIA is tapping into the sovereign AI market, partnering with governments to develop domestic AI capabilities, expecting significant revenue from this sector in fiscal 2025. NVIDIA expects the automotive sector, especially for AI-powered autonomous driving, to be a major revenue driver, with significant partnerships like Tesla using its technology. The company has improved its profitability, with non-GAAP gross margins increasing to 78.9% and net income rising 462% year over year, demonstrating strong pricing power. NVIDIA has returned $7.8 billion to shareholders through repurchases and dividends, highlighting its confidence in future growth and commitment to shareholder value.
So deep in your company, you've been building GPU infrastructure, running these large recommender systems for a long time. Now you're
a little slow on it, actually, getting to GPUs.
Yeah, I was trying to be nice.
I know. Well, too nice.
I was trying to be nice.
Well,
you're my guest.
When I was backstage before I came on here, you were talking about like owning your mistakes or something, right? So
you don't have to volunteer it out of the blue.
I think this one has been well tried.
Yeah,
it's like I got raked over.
But
the
as soon as you got into it, as soon as you got into it strong. Let's just put it. There you go. There you go.
That's how we roll.
Now, the thing that's really cool about generative AI is these days when I use WhatsApp, I feel like I'm collaborating with WhatsApp. I love Imagine. I'm sitting here typing, and it's generating the images as I'm going.
Yeah.
I go back and I change my words. It's generating other images.
Yeah.
And so the one that old Chinese guy enjoying a glass of whiskey at sundown with 3 dogs, golden retriever, golden doodle, and a Bernese mountain dog, and it generates a pretty good looking picture. Yeah,
we're getting there.
That's me
every month.
Yeah.
Getting better.
And then now you could actually load my picture in there.
Is NVIDIA a buy? Despite the challenges and potential for short-term volatility, NVIDIA's strong position in the AI market, robust financial performance, and strategic growth initiatives make it a compelling investment. With expected revenue growth of 97.5% and an EPS increase of 111.4% in fiscal 2025, NVIDIA's high valuation is justified by its growth prospects. Investors looking at long-term gains should consider buying NVIDIA ahead of the Q2 earnings report, especially if there is a post-earnings dip.